multiple events we've seen throughout this trading week, starting off with the US dollar, then muted trading for the greenback on the back of the FOMC minutes, which showed members were actually split in terms of their position for future rate hikes and withdrawal from this stimulus because of low inflation. Now, I've signalled before, noted before, that if anything is to slow the Fed down, it will be low CPI. And Yellen has noted on a couple of occasions that it's only due to temporary factors. But how long can she say this for? It's been low for quite some time. So in terms of the dollar, it could very well be capped across the board given this new update from the FOMC. They're going to be focusing on this, and it's not going to pick up overnight. So do be very wary of that for your dollar trading going forward. Elsewhere, non-farm payrolls like to dictate trading for the very short term, but could be overlooked because of the CPI, which is now going to be in focus for the US going forward. Elsewhere then, over in the UK, soft trading across the board for the pound on the back of weaker than expected PMIs in the form of manufacturing, construction and services PMI, guys, which all make up a large percentage of the UK's growth, all missing analyst expectations. In terms of going forward for the pound, could very much be range bound for the coming weeks as investors look for clues from the Bank of England in terms of their next monetary policy updates. Over in Europe then, guys, the ECB did release their monetary policy accounts minutes where there's three things to really take away from this, guys. One, they did discuss how to signal their increasing confidence in the EU economy. Two, they considered dropping its pledge to accelerate its massive bond buying program. And three, they did indicate that rates further below zero is unlikely. So they're clearly shifting their stance, moving away from the dovish position to hopefully to a more neutral position, wanting to come away from that ultra easy policy and start to gradually tighten it up. So what we have seen is euro bulls flocking to the euro, really strengthening across the board, particularly looking at euro dollar, likely to continue that dominance going forward as market participants pricing expectations for the ECB to start to taper back from that aggressive bond buying program and hopefully tighten up policy. So keep that in mind. It's likely to dominate and keep euro buoyant for the coming weeks or so. Looking geopolitical news, tensions have once again flared up between the North Korea and the US, with North Korea continuing to test missiles, and in the latest report suggested that it has capability of hitting the US. So this again is really heightening concerns that North Korea could take some action. Whether they be crazy enough to do so or no, who knows? But nevertheless, this could dominate the markets, as what we typically tend to see in these heightened concerns is flight to safe haven assets. So in the likes of your Japanese yen, your Swiss franc, your gold could continue to start to see some strength if this does gather some pace. So other than that, that's it from me, guys. I hope you've had a smashing trading week. I do hope you have a great weekend and look forward to reporting the key events next week. Thank you very much.